Hello there. I am going to be attempting to do this. Okay, I do hate that I can't see myself here, and that's going to create a problem. So let's pull that one out there. Let's get into not that. Here. This is what we've been trying to say. Okay. Okay. So recently we just got an update with Robinhood. It was about 2 hours ago, but it took me a long time to actually get onto this screen, this setup. I completely understand why a lot of people are having troubles with streaming. Um, my account isn't primarily on this, but in the last couple days, I have been taking a liking into like this whole situation with Robinhood, with the stocks, with the short squeeze, and everything like that. Um, as like a disclaimer, though, um, I'm not here to give anybody advice. Um, and literally, I have a small portfolio with Robinhood that I did start right before they started restricting. I also have a small portfolio in TD Ameritrade, which is bigger. I've had that since 2017, I want to say, um, but it is a small portfolio. Um, and then I have a Roth, and I recently just started getting into also Webull. I think I opened that up on Friday, I want to say. And then I also opened up a cash app stock thing that they came out with, which is really good if you want to if you want to trade stocks that are too high for you and you only want to put like $1 in or $2 in. So I'm using that for like stock like Tesla, you know, Apple, Amazon, stuff like that. Um, but again, this whole thing is for okay, I don't know what's going on here. um, so let me, there we go. Let's see. So I just want to open up this on my phone to see how it's going out. Let's see. Okay, let's see how this works out. Okay, so the stream does look like it's working pretty well. It does look like there is a delay of a couple minutes, but that's kind of normal for this here. So let's get to it. They sent out an email about 2 hours ago, and they decided to dive in deep about what's going on. We wanted to reach out to you after a transformative week in the market to answer questions we know many of you are asking. Why Robinhood limit certain stocks? What is going on here? Okay. We understand that the temporary limits we placed on certain stocks in the past week are frustrating for many, especially since we built Robinhood to expand access to investing. We have always thought to put our customers first, and we want to be able to invest on your own terms. Okay. Okay, sorry guys, I'm just trying to figure out this whole streaming thing. It is taking a little bit of time to kind of configure on this. Especially since it does say that 2 people are watching, and I kind of want to know if that person's me at this point. So let's see. It might go down. Okay, I am still trying to figure out how to set this up, guys. I'm really sorry. But I'm really happy that I have this streaming service back up, which is really good. Okay. Okay. So I'm just gonna continue, see where this goes, and worst case scenario, you know. Worst case scenario. So let's start this out again. So a note from Robinhood. Hi Dana, since you know my account's under my name. We wanted to reach out to you after a transformative week in the market to answer a question we know many of you are having. Why did Robinhood limit certain stocks? So obviously this is the main question. We're trying to figure out why they did it. Did they do it to help hedge funds? Did they not? Are they doing it to like kind of save their asses, or what's going on? So we understand that temporary limits we placed on certain stocks this past week were frustrating for many, especially since we built Robinhood to expand access to investing. We have always sought to put our customers first. And we want you to be able to invest on your own terms. So this is a big thing. The actual thing that they kept on saying was that we're restricting you because the markets are volatile right now, and we're trying to save you from, like, losing all your money. So that was how PR was taking this the last couple of days, especially when they first limit this last week. So at least they're saying that they do want to, like, make it a free market to where they want us to be able to invest on our own terms, which is kind of how they started out, right? They wanted us to be able to trade like the average Joe. So let's continue. So I already see here that there's a link. So this isn't the only thing. So to help explain what happened and why we had to take action, we wrote a letter to our customer and to capture the key understanding for you below. So what I decided, so I'm going to actually click on this, and we're going to read the entire letter because there's literally only 4 points here, and if the letter is pretty big, I don't fully trust the PR of Robinhood to give us a kind of like detail approach on what the letter was about. So hopefully the full letter gives us more information, and the PR kind of like redeems itself from what it's been doing last week and today. Okay, so a letter to our Robinhood community. We built Robinhood for you. Yep, that's what you said. Let's hope that you keep that promise. So to our Robinhood community, since day one, we worked to put financial power into the hands of everyone, not just a few. We believe the financial system should be built to work for everyone. This mission, at its core, is fundamentally shifting the financial landscape. At this moment, we are witnessing a massive transformation across the financial markets. Damn, I'm tired. The intersection of technology, democracy, and finance is ushering in an entirely new era of financial participation. And amidst this movement, many of you have questions about decisions Robinhood has made in the last week and want you to expect and what you can expect from the firm going forward. There is a lot of confusing information out there, and we have tried to provide clarity as best as we can. Y'all have not. Y'all have really not, but let's try this out. We want to hear from you. We want you to hear from us directly. Wow. Okay. Simply put, Robinhood limited buying in volatile securities to ensure it's complied with deposit regulations. We posted an in-depth explanation on our blog on Friday, and we hope you'll take a look at it. Okay, so this blog that they posted, they definitely didn't advertise the blog or the post that they posted on Friday, because I was literally trying to get as much information on Friday night as possible, because as a disclosure, I do have a position opened in AMC right now. I have 6 stock in TD Ameritrade. At its high point on at its high on Wednesday, because like many of you probably didn't realize what was going on until it was going high, and you were like, oh, this looks great, right? So I decided to buy in there. Probably not the best thought process, but yeah. So So on Friday, I really wanted to look into like more information on what's going on and why they were restricting and all of this. Um, so let's look at the blog first. Again, this is the second freaking link that I had to click from the initial email. And there's another link there, but I'm pretty sure that that's just going to tell us what the temporary restrictions are. So the actual rundown of the stocks. With the extraordinary market activity this week and the temporary restrictions we put in place on certain securities, we received question about how Robinhood works, trading, clearing, and settlement, and clearing houses. Here's an overview of the mechanics, or the plumbing, behind your trades. Let's dive in. So this is actually really good because it's going to give people an insight on what actually goes on the backhand. So if PR did this correctly, it should be clearing up some of the questions that the average Joe doesn't really know about how Robinhood handles its stocks. So let's get into that. When you buy or sell a stock, Robinhood sends your orders to market makers that execute your trades. Market makers send a record of the trade to Robinhood Securities, which works with a clearinghouse to record the trade. It takes 2 days for the clearinghouse to transfer the stocks to the buyer and funds to the seller. This is known as clearance and settlement. In other words, everyone getting what they agreed to when the trade executed. In the industry, this is referred to as trade date plus 2 days to settle, or T plus 2. So right here, what they're trying to say is that even though you immediately see on Robinhood when you buy the trade, right, you see it automatically in your portfolio, that doesn't mean that Robinhood in the background isn't working to actually get this for you. So it does take them about 2 days to actually settle the stock, whereas the average Joe would think that it happens like that, snap of your fingers, right? So let's continue this. Sorry about the yawning. Clearinghouses are SEC-registered organizations that act as central depositories for securities. They keep a record of the stocks owned through a brokerage. Clearing brokerages, like Robinhood Securities, are members of clearinghouses. These clearinghouses have membership rules approved by the SEC that governed the activity of their members. Clearinghouses establish financial requirements for members, including deposit requirements designed to reduce risk to the clearinghouse. So the clearinghouse is literally just the middleman. So clearinghouse is pretty much, so you buy something on Robinhood, they go through a clearinghouse, and then that clearinghouse gives it to the person that is either selling or buying on the other side. So clearinghouse literally is trying to make sure that they don't have any risk when it goes to being the middle person, because if someone on either side doesn't have the money to fulfill it in those 2 days, then the clearinghouse has to actually put up the money to clear that stock that was traded, right? Also, if y'all have questions that I'm not like answering, that you have any like anything that you're not sure about, definitely just put something in the comments and I will definitely try to answer them. So let me just go back to that. So let's go to clearinghouse requirements. To clear or settle customer transactions each trading day by 10 a.m., clearing brokers like Robinhood Securities have to meet those deposit requirements to support their customer trades between the trade date and the date the trades settle. We withdraw money on some days and deposit money on other days, depending on the day's requirement. How do clearinghouses determine how much they require? It's pretty technical, but the process basically works as follows. Clearinghouses look at a firm's customer holdings as a portfolio. They use a volatility multiplier looking at specific stocks to quantify their risk. The clearinghouses may assign significant additional charges based on how much of one stock a firm's customers hold. If a firm's customer has more buy than sell orders, and the securities they're buying are more volatile, the deposit requirements will be higher. Clearinghouses can also require additional deposits if certain thresholds are met. So they're trying to say that because these stocks were so volatile, these clearinghouses were requiring Robinhood to put up an extra deposit. And yeah, so that's pretty much what this said. What happened this week? The amount required by clearinghouses to cover the settlement period of some securities rose tremendously this week. How much? To put it into perspective, this week alone, our clearinghouse mandated deposit requirements related to equities increased tenfold. And then what led us to put temporary buying restrictions in place on a small number of securities that the clearinghouses had raised their deposit requirements on. So what they're trying to say is that since they had to put up more money, Robinhood had to put up more money to the clearinghouses to make sure that they had enough money that they weren't going to kind of short the clearinghouses. They needed to make sure that they had this deposit there so that they can actually make the trade once it's settled. And what it looks like is that they're going to say that they didn't have that much money, and that's why they had to put a requirement, a restriction requirement on these. But again, they didn't say it completely, but let's hope that they do later on in this article. It was not because we wanted to stop people from buying these stocks. We did this because the required amount we had to deposit with the clearinghouse was so large, with individual volatile security accounting for hundreds of millions of dollars in deposit requirements, that we had to take steps to limit buying in those volatile securities to ensure we could comfortably meet our requirement. Our goal is to enable purchasing for all securities on our platform. This is a dynamic, volatile market, and we have and may continue to take action to make sure we meet our requirements as a broker so we can continue to serve our customers for long term. Rest assured, our position remains firm. We stand with our customers and will continue to provide you with resources and tools you need to become a confident and informed investor. So, Before we go into back into what I was looking at before this, um, pretty much they're just kind of saying again that they didn't have enough money to put up for these deposits, and that's why they had these restrictions. And they're continue on to say that they're going to continue with these restrictions, um, that that they pretty much don't care, but they want to make sure that you know that they're behind you. They're not behind the hedge funds, right? But in reality, you look at this and you're like, but you're still going to restrict something. So where my money was going, up a steady hill, it's now rolling down, and, we're hoping it doesn't crash. But, like, obviously, they're saying that, like, they really don't care. They need to put up this deposit that they don't even say that they don't have, which is kind of like, because nowhere in here was it like, oh, like, we don't have that much money, like, we can't, like, meet it. And literally they're like, because literally all they say is that we had to take steps to limit buying in those volatile securities to ensure we could comfortably meet our requirements. So it's not that they couldn't meet it, it's that they couldn't meet it comfortably. But if you want to be in a comfortable position, like, a short squeeze just isn't that. And it's not that for the people that are on, the average Joe's side, that it's us. Because, at any point that short squeeze can come down, and the squeeze can, like, be done. So there's that. Also, again, the market becomes volatile, and then the hedge funds are literally, like, scared, right? So it's not comfortable for any of us, and they're just like, oh, like, we'd rather put restrictions on you guys because, we're not going to be comfortable in, like, putting up deposits like that. Not that they don't have it, but that they wouldn't be able to do it comfortably. So whatever that means for them, right? I don't know. Like, literally, if they had put, like, oh, like, we really couldn't make those, like, if it had gone any higher, like, we wouldn't have been able to, like, make those payments or whatever, would have been better. So again, this little line here, again, their PR is not the best, and that's an issue. Let's see, what do we have left here? Okay, so let's go back to where we were. So Robinhood is about expanding everyday investors' ability to invest. Robinhood is about expanding everyday investors' ability to invest. To be the trusted and responsible platform you can rely on, Robinhood has to operate within its existing regulatory environment. We had to make progressive strides while simultaneously complying with law and regulation outside of control. In the spirit as we move forward, we want you to know that empowering you is what guides every decision we make. Robinhood has always sought to put out our customers first. Standing by our Robinhood communities means being a responsible partner and being there for our customers throughout any trading environment and communicating about the rules our industry faces and how we are living up to them so we can be here for decades to come. That's a high standard we seek to meet and exceed every day. We are committed to seizing this moment as an opportunity to continue to improve while we try to expand access to the entire financial industry for everyone. Today, the universe of investors is younger and more diverse, and the financial system is more accessible than ever. With a new generation of investors at the helm, the future looks a little brighter. We're humbled by what we will accomplish together. So, to be honest, the blog on Friday gave us more information than this whole thing. Like, legitimately. This was today's letter, and the blog that I had just finished reading, this one here, right? Let it load. This one here, which was on Friday, gave us more information on how the system worked and why they were, like, the only, like, logical reason and PR reason that they could, like, say, which was the deposit, like, debacle. But, like, in this new one, they barely hit on that. Like, they literally were just like, our mission is to, like, expand the average Joe trader to, like, be more into, like, the financial system and have more capabilities of investing. Oops. But that's literally all they're saying here. This whole thing literally just says that. And they're like, oh, just read our blog from Friday. But yeah. So let's go back to the email and let's read this. For Robinhood to operate, we must meet clearinghouse deposit requirements to support customer trades. Deposit requirements are determined in part by how much stock a firm's customer. Let me log out of that. Okay. Okay, so let's read their points here. So, captured the key understanding for you below. For Robinhood to operate, we must meet clearinghouse deposit requirements to support customer trades. So that is the key point that came from the blog. That did not come from the letter to our customers, which is right here, right? This letter to our customers, this first thing here was the blog itself, not the letter. But let's continue, right? Deposit requirements are determined in part by how much stock a firm's customer holds. If a firm's customer holdings are volatile, a broker, in this instant Robinhood, is obligated to meet higher deposit requirements. Again, something that was in the blog and not in the letter. Last week, in part due to volatility in some popular stocks, Robinhood's deposit requirements rose tenfold. The combination of the deposit increase and extraordinary increase in volume on these particular symbols led us to put temporary buying restrictions in place on a small number of those stocks. So again, information that we got from the blog, not the letter. And on top of that, I think this point here is a little bit freaking better than what they put in the blog, right? Because they are telling us that the reason is because, the deposit was increased. And then this part, right? Let's read this. We had to take steps to limit buying in those volatile stocks to ensure we could comfortably meet our deposit obligations. We didn't want to stop people from buying stocks, and we certainly weren't trying to help the hedge funds. So, again, comfortably meet our deposit obligations. So, yeah, when you're doing a business, obviously, you want to not risk like deposits that you made, right? But at the same time, you're using the word comfortably, which really kind of like screws up your PR here, because literally you could have just said, we had to take steps to limit buying in those volatile stocks so that we could ensure we had to take steps to limit buying in those volatile stocks to ensure we could meet our deposit obligations. So using the word comfortably definitely hurt them more than it helped them out here. Because if you would take comfortably out of this sentence, it would make more sense. Because literally it would be like, oh, you couldn't meet your deposit and that's why like you had to put restrictions on it. But here it's saying we could have, we just wouldn't be comfortable. Kind of fucked up. I don't know about you, but it kind of is. And then again, they want to reassure this because this is the main reason why they're getting a lot of heat and fire, that they're trying to help hedge funds. That's a conspiracy theory. We don't know if that's true, but what we do know is that by them restricting these stocks, it is kind of helping them out. Like, the amounts are going down and they're able to buy into those amounts and like relieve themselves of the shorts that they put themselves into. So this really gives us no information other than we wouldn't be comfortable, dishing out that money, so we just didn't. That's literally what this whole thing is. So let's continue here. We hope you take away this. At Robinhood, we stand with everyday investors participating in the markets. Standing by our Robinhood community means being there for our customers through any trading environment. We'll continue to improve as we break down barriers in the financial system to open it for all. Thanks for being a part of the Robinhood community. Now, again, I haven't taken out my stocks from here because I had just opened Robinhood, and at this point, my portfolio is too small to just go ahead and transfer it over, especially since I don't know how the transferring process works. And again, we're in a non-normal market right now. And I didn't want to cause any problems with transferring it over. Obviously, after this whole thing dies down, I probably will just, I'll be closing out certain positions, and anything that I have left on there, I will try to transfer over to either my Ameritrade account or Webull, which I just started, or another account, because a lot of different YouTubers were literally talking about different like new different trading firms. So like but I decided to go with Webull, and I don't have any positions opened yet with Webull, to be honest. Let's see here. Let's see here. So do I have any of, there we go. So let's just look at my portfolio here. If it decides to like run or not. I don't know what's going on. Computer is definitely having trouble. It's like most definitely having trouble here. Okay. So again, I opened up Webull. I opened up Robinhood with a low percentage, because I was like, I'm just going to buy like a single stock in like all of these different volatile short squeezes, right? So I actually just bought a percentage of GME. I bought like $10, but I bought it at I want to say, what did I buy it at? My computer is running so slow. Like, I totally understand why. Okay, there we go. So I bought it there at 339. Bought it at $10. I am close to having, like, to literally being in half that amount, which is insane. Like, the fact that it was doing so well and then it came crashing down. Like, literally, it was at, the high was definitely like 4 something though. I know that that was like before it opened one day. It was definitely like at 4, and then it literally dropped. Yeah, so it was at 468, and then it literally dropped to 132, and then it was rising back up, and then it dropped to what it is at now, so 189, which really sucks. But yeah, that's what I got on that. I don't have a closing position on this, so GME I'm gonna hold out until like whenever. It is only $10 of a share, so not a lot. And then I do have 1 share of AMC. Again, I have more of AMC in my Ameritrade account, but we're talking about Robinhood, so let's keep on this Robinhood train here. So again, AMC, I literally purchased it at 1893, which was partially at its all-time high. Again, I did this at the wrong time. I got it I guess I'm actually pretty glad that it wasn't all the way up here at 1988 before it dropped significantly to $9.40. I feel like as long as it does not drop to the $7 mark, which it did at some point, so it dropped to 7. As long as it doesn't drop to 7, I feel like we're still in this squeeze. Of course, we never know if it is or it's not for sure, but I'm pretty like sure that as long as it doesn't fall below that 7 mark, we are still in a squeeze. Last time that I saw, the short percentage was at 73. I saw that at 4:30 today when the markets closed. Um, so yeah, um, so I'm not doing great in that position. I have 7 shares in my Ameritrade account. So again, like it is getting scary to the point where like GMC is like, I mean, GME is like halved out. AMC is like, going to the lower amounts. But then again, it's not as low as it was back then. So AMC, I feel like it's still pretty strong there. I still feel like there is a short squeeze that's going on. AMC, unfortunately, I mean GME, unfortunately, I I really can't say anything, to be honest. I don't know. It just doesn't look great for it, right? Like, I want to say that as long as it doesn't hit that 132, 126 mark, that we're still in that short squeeze. But if you look at that whole trajectory, it just looks like it's going down. But obviously, some people had pulled out their shares to go to a different broker like Webull and all of that because Robinhood was sketchy. Don't like again, like we've read that whole fucking article. This whole article we read and not one thing on there. Not one thing that kind of made me go, huh. I mean, I guess they were kind of, in a bind there. But no, they just weren't comfortable with letting people they weren't comfortable with shutting out that much money. So, yeah. Not that they couldn't. They just weren't comfortable with it. But anyway, I feel like that's going on a low point. I guess we have to see what happens on tomorrow, on Tuesday. I worked from home today, so it still feels like it's Sunday for some reason. It's snowing out like a lot, and it's still snowing, so that's a thing. I bought new Kia as well. I am down on it because, again, I bought all of this stupidly on the high. So I bought this at $6.62, which if we look into it, wasn't the all-time high, right? because the all-time high was 774, but it was pretty much a high point. Um, but yeah, so I bought it at a high point on the 27th, and then, you see it crashing on the 28th because of Robinhood restricting. So today was a really good day for Nokia, though, because it did look like it was going on a high note. I have hope that it will literally go over the $5 mark tomorrow, um, because today in the right right when markets opened, it was at 498, which was amazing, right? That's almost 5. I feel like we're going to get to that number again by opening tomorrow, but we never know. Um, you know, I feel like this is trending upwards, whereas everything else was trending downwards. I also feel like this is because Nokia is a lower amount, so I feel like more people are buying into this because it's so cheap. Whereas, like, the average Joe that doesn't have a huge portfolio, doesn't have huge capital, is going to look towards Nokia. If you have a little bit more capital, I would say you're going to be looking towards, AMC. And then, if you're rich pretty much, you'd be looking into GMC. Now, for a normal average Joe, rich is like you have like 10 grand, stashed away somewhere. Um, but um, then again, if you're very low on cash and you do want to like enter into a position, I feel like that's also why Naked was doing so great at one point. Let it open up here. So today when it opened, it was at almost $2. It was at 188, and then again that huge drop, because that is the hedge funds attacking that short attack there. Today I was listening to Brian Young. I don't know how to say his name. I feel really bad, but literally I would like he's one of the only people that I've been watching recently when it comes to this stuff, because he's very engaging. Oh my god. Here you go. He's very engaging. He's very like on the money. He has so many guest speakers coming in, and all of them have great input. They've been doing this for years, and they're really explaining different things. So they explain that these attacks that you see, these downfalls, are that hedge funds are selling their shorts to other hedge funds so that it looks like they're so it looks like the hedge funds are actually like helping out their shorts, so like they're selling off their shorts again. But in reality, it's just going from one hedge fund to the other, so the problem still stays, and that's why over, the period of time, it goes up again during the day. But we did see that Naked Brand did stay pretty low this time. Again, I feel like more people are going towards the more known brands. Nokia has been there forever, That's the type of phone that you can throw literally like across the fucking wall and it will not break. Like literally. Like, I had a professor that literally, history class, high school, took his phone, went to the back of the room, right? Threw his phone to the whiteboard, I mean to the chalkboard, and was like, "See, that doesn't break." Old phones are better than new phones. Literally, you can just throw the phone like not even a foot down and it shatters. This was definitely back when iPhones, their glass on top of it was like the worst. Literally, like a single like small drop can shatter it. Like now, obviously, if you throw your iPhone, um, like from the top of the ceiling, obviously it's gonna break. But like if you throw it from like your table to the floor, it might not break, right? But back then, like you throw it off your desk, like there's a 90% chance that your phone would break. Um, Thankfully, that's not um, that's not the issue here, but yeah, so Nokia is known. AMC is known. Um, GameStop is known. I feel really bad about not buying GameStop a couple of um, a couple of months ago because I was looking at stocks that I wanted to buy, and I had actually let me go so that I can get into it. I just want to let's take this out real quickly. Let's take this out of the screen um, so that I can quickly log in here. Um, and by quickly log in here, I guess I mean my computer's just going to take forever for it to log in. Um, so I recently wanted to invest in Clubhouse, which is a new app, uh, a new like social media app that's out there. And Webull isn't supporting it. Ameritrade isn't supporting it. Um, it's not even on Robinhood or Cash App. So if anyone knows how to get into buying Clubhouse stock, like let me know. Because that's a thing that I'm trying to get into and I don't know exactly where to buy it. Okay. Okay, so I'm trying to collapse this and this isn't working. Okay. Okay, I am trying to lift this up. There we go. So I had recently bought couple like months ago Play, which is Dave and Buster's. Again, I bought it like pretty low. I want to say that I bought this like in May or June. Like I wasn't like right at like March because in March I had just um, moved to a new apartment. So after like security and realtor fees and all of that, it definitely caused an issue there. So I had to wait until like later on, June, May again. I'm not sure when I bought these, but it was around that time. So you can actually see that, um, again, plays Dave and Buster's, and then um, let's see here. I bought, oh, um, let's see. I also bought Royal Caribbean. Um, I bought it at 34, and I was like, this is a really good investment because before pandemic times, it was at 130 something. And I was like, oh, that's $100 profit. Like, if it gets back up there, obviously, I knew that it was going to take time for Royal Caribbean to get back up there. Um, I don't think Royal Caribbean gives dividends, or maybe they used to and they don't anymore, but I had assumed that Royal Caribbean gave dividends, and that's why I also purchased it. But unfortunately, they haven't been giving dividends as of recent. Um, let's see. Here, what else did I buy recently? So again, like I bought AMC uh, just because of like the volatility, and I bought 6 shares. Blackberry, I bought one. Bed Bath and Beyond, I bought one. Um, and then Nokia and Fossil, I bought. Nokia, I bought 2, and Fossil, I bought. Fossil, I bought 1. Sorry, I was looking at this number and I was like, oh my God, how did I buy Nokia at 1370? And I was like, oh no, 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 no. That's just, that's both of them. So yeah, my mind just went like, damn. Um, but so Fossil was one of those that did spike along with AMC and all of them. And I was like, oh, anyone that really knows me knows that I buy Fossil a lot. By a lot, I mean like I usually buy myself a bag once every like 2 years, and I usually go for Fossil. Um, Recently, I haven't been buying like a bag because my grandparents had bought me a Kate Spade bag, and it's black and it's like very good quality, and I've been able to use it, and like nothing's like, I don't know, it's just really simple. It goes with everything that I wear, and like when I used to buy stuff from like Fossil, I used to buy like brownish bags, or like brownish bags with like a design that's like green or something, and like having a solid black bag kind of like gave me that opportunity to be like, well, um, I don't know. It just like, I've had it for like 3 years now, 3 or 4 years now, and I haven't bought a new bag. But back when I was buying bags every 2 years, it was Fossil. So I was like, oh my God, let me just go see how Fossil is doing, right? And I saw that they were spiking, and I was like, ooh, let me buy it. But again, this was on the 27th before everything crashed because of the restriction of buying stocks. So I kind of just want to like make my losses on these. So I'm taking AMC to the moon, like diamond hands there, but I kind of just want to break even with Blackberry and Bed Bath and Beyond. I set Fossil to a $20 to a $20 limit. because I do feel like Fossil can go back up. Um, and then Nokia here. Um, I'm also holding that. Hopefully, I did put a $7 limit on that because it was a $7 high. So I was like, if it goes back to that 27 um, January 27th date high, then it'll be able to mitigate any of my losses, and I'll have a very small uh, I'll have a very small profit there of 30 cents. Um, let's see, what else do I have on here? So when I was younger, I did a stupid thing and I bought Sears. Um, yeah. Um, the first two, the first two stocks that I bought were Sears and JCPenney because, growing up, like Sears and JCPenney were like things that you would go and you would buy stuff from. I don't know. Like my mall near me has a Sears and a JCPenney, and like those were like the two stores that you would go to. And then like it also had Macy's and Kohl's, but it's like JCPenney and Sears were like those places that you would buy stuff like more often because they were a little bit cheaper. Kohl's was like right above them, and then like Macy's was like if you want to get something fancy. Yeah, my store, like the mall that I like have is not one of those fancy Nordstrom, Lord and Taylor, Numis and Marcus type of stores, type of malls there. Um, they're really like one of those smaller ones. But anyway, so I decided as like 19-year-old, hey, Sears is good. Um, such bad thought processes back then. I don't even see JCPenney anywhere. I know that I didn't sell it. What is JCPenney's? I am almost 100% sure that I didn't sell JCPenney's stock. Did it just like disappear? Which is possible. I'm not gonna say that it's not. I also bought a bunch of like cannabis like stock back in the day because that was a huge thing. Um, so obviously I invested in some that just didn't work out, but I also invested in some that did, like Cronon, Kronos is up uh, about $61 since I purchased it. Um, CGC also up $41. And Afria, which is also up $25. So I want to say that I did 50-50 on the cannabis stuff that I bought because it was like you either did really good or really bad. And, I pretty much got on the half mark on all of them. Um, Back when I was buying Play, which is Dave and Buster's and Royal Caribbean and United Airlines, um, which isn't doing great. I thought that it would be going back up a little bit more exponentially now, but it's not, which I'm kind of sad about. But I do still feel like it'll go back up to the 80s, um, to like the 80 mark once the pandemic's over. But I just thought that it would be doing a little bit better now. But yeah, so I bought Dave & Buster's, Royal Caribbean, and United Airlines. Oh, and Uber. And I had like a little bit money left over, so I bought this Southernly Hotels because I wanted a dividend stock, and this was giving out dividends like the following month or whatever. So I looked at it and I was like, oh, like that's not bad. So I bought three of them. Uh, let's do the math there. I bought three at 5.55. So if we do 5.55 divided by 3, we get a total of 185. So each stock was 185, and yeah, which isn't like, it wasn't bad, and I needed something to like cover whatever. And it's up like $2.76. So it's pretty good, and I feel like over time it'll like grow exponentially at some point. Like, I don't know. Um can we like pop these out? Let's see how this works out. So it says that it has no regular annual dividends, but I know that it does, um, because I've definitely had it before. Um, what I do recommend if you are on TD Ameritrade, and you've only used the app so far and you haven't really dove into the website. The website gives you the option to do reinvest your dividends, and it'll literally have you able to choose which ones you want to reinvest in. And I definitely encourage that, because I feel like if you reinvest it, like like at first, like when you first start out, like my income for dividends annually is like $3. So like if I don't look at it, like if I see the $3 coming in, it's going to be like, oh, it's just going to sit there, right? But if you like reinvest it, then it'll go back in. And it said that it's going to reinvest it in like ETFs, which I'm not like, I'm a fan of, but I'm not like super a fan of. But we'll see how it works out, and you always have the opportunity to stop that reinvestment. So I'm going to give it a year, see what happens, and if not, um so my favorite stock, um again, you don't realize that it's my favorite stock because um, there's obviously these stocks from the weed stocks, that I bought at small amounts, because I bought this at like $4 each. Um, I bought some at like pennies on the dollar. Like I bought this one at like what? At like $5 each. This one had to be like $1.50. This one was like $2.28. Like I bought them at really low prices. And so you can see the 10 there, but that doesn't mean that it was like my favorite stock. It's just the fact that it's sitting there. I'm literally putting all my money into Wendy's, because I feel like Wendy's is going to be that next McDonald's. You know what I mean? Like McDonald's, like, again, I want to look into, it's just easier to go into this portfolio and look it up, and not in a mature, not in a Ameritrade, because it shows too much of my personal information. But if you look at McDonald's, right? And you look at like the 5-year trajectory. you see that it's been going up exponentially, and it's currently at 200, and the dip literally only dipped to like to 148. And their dividend yield is 2.42. And then you go to Wendy's, right? And I feel like Wendy's is just a smaller chain, and it's on that same level. Like, it's on the same level as Burger King, as McDonald's, and unfortunately Burger King is mixed in um with other stores. So if other stores don't do well, then they don't do well. Wendy's is literally just Wendy's. So so again, it's been going up uh, exponentially. You can see that. And they have a 1.42 dividend yield, which I also know is going to go up exponentially as, in the same format that their amounts are going up. Obviously, they had a little bit of a problem in the beginning of the year, because at first there was a lot of chains for Wendy's that in the Northeast area and part of the Midwest. A lot of their chains were owned by a CEO that had given money to the Trump organization, and a lot of people were mad about that and actually boycotted those stores, and that's what unfortunately drove the price down at first. And then you get that price range that went down along with the pandemic, and that led you to like a $10 decrease there. Again, I'm trying to see if they do have trying to buy again at a lower state so that I can increase my profit over time. So I want to like update my cost basis on Ameritrade, right? Because right now my cost basis is 2043. So I am waiting for Wendy's to dip a little bit further down. So I want to get it at a lower dip, because I usually buy one every month, or every 2 months, and that's how I like get to do things. But I'm gonna start doing that more and more as time goes on, because I feel like if I buy one every month, then I will get to a certain point. But I also want to put money into my other accounts, because I literally just opened a Yoda account, which if you don't know what that is, it's down in my description below. Y'all should just check that out. It's a bank that also like puts a lottery ticket, so that's also going to be like a $25 expense, because which isn't an expense, it's like a savings. So $25 into that, $25 into my Ameritrade. And then like $25 into the Cash App, and then I'm gonna figure out what I'm gonna do in Webull, and again, I'm gonna try to stray away from Robinhood, but they did give me this free let me out here. They gave me this free stock, which was pretty good. Wow. what was that? Oh, I just realized that you can't see the number um, that well. Um, but, or maybe you can. Um, yeah, you can. Okay, so as long as I don't go like that, you guys can see it pretty much. So let me just keep that as low as possible. So they gave me this. Again, I got into this stock when they gave it to me at literally when it was going up. So I got it. Where did I get it at? Let's see. I want to say that I got it around here, like right around in this area where I was going up, right in that trajectory. I got it. So sometime, I want to say that it was like 361 around that um, amount, because it doesn't tell me, because it assumes that my entire return is the full thing, but in reality, like, I still want to know like like where did I get it at and how good it's doing. But as you could see, that trajectory is amazing. But this was only in one day. So again, I feel like it's just going to come tumbling down at some point. Like, this is too exponential too quickly to get to that point, because unless this is a short squeeze of some sort and I just kind of like randomly went into it, great. But I don't know. I don't trust this. You know what I mean? I don't trust this exponential thing because it was just in one day. I feel like it's going to go down. If we look at a 5-year train, their all-time high was around $6. Um, it looks like it's going to a certain part, but let me check. Let me see. What's the, so it's CPRX, right? Let's check one thing. CPRX. Stock price. We want to see its max lifetime. Again, my computer is really slow at this point. Okay. So it started out in 2006. Since then, it went severely down, went back up in 2015, went down again, and then has slowly tried to get back up. I do kind of feel good that in the last 3 years or so, it's been steadily going up. So maybe I want to figure out if I'm going to keep it as a long-term investment or if I'm going to cut it at some point and sell it at a certain limit. But for right now, it's looking like a long-term investment. Again, if you're just tuning in, Robinhood's update was pretty much just their letter that they wrote to their clients today. And um, they use this particular phrase that we really didn't like. Where was it? Oh, wait, it wasn't here. So, they use this particular word here, which is comfortably, which was kind of the thing. They were like, oh, we just didn't feel comfortable like putting that big of a deposit in, so we just restricted everything. So just because they didn't feel comfortable in doing it, they kind of screwed everyone that was benefiting out of this short squeeze. And inherently, if they wanted to or if they didn't, it did help the hedge funds, even though here they're like, we're behind. We don't want to stop people from buying stocks, and we certainly weren't trying to help hedge funds. So, again, they want to be like, we're here for the everyday investor, but in reality, we come first, and if we're not comfortable, we're just not going to do it. So, again, some things that you just don't want to really say, which again, this PR service is insane that they don't realize that literally they could have cut this word out and everything would have been fine. Right? We had to take steps to limit buying in those volatile stocks to ensure we could meet our deposit obligations. By using the word comfortably, that really hurts everyone at this point. Because it's like, we just weren't comfortable. We just, we're just gonna let it go. You guys can figure it out on your own. We're just gonna, So it's kind of fucked up. Just it is. Anyway, I'm going to pretty much stop the live stream here. If you have any questions, definitely let me know. If not, yeah. Have a nice day, guys. Bye.